let's start by talking about your background because you got an interesting background. Kind of tell us what you did before this, and then kind of walk us into what you're up to today.
Sure. Yeah, out of college, I joined the Army. So went to Army Officer School, OCS, at Fort
Mhm.
Benning. Uh, did some time there, and actually have spent 14 years in the Army Reserves at this point. I think it's almost 15.
Amazing.
Um, but
Thank you for your service.
yeah,
Thank you
of
for serving.
course. After that, I got a master's degree while I was doing the Army, and then went and got a PhD and became a political science professor at Dallas Baptist University. My research area was blockchain and property rights. First, it was property rights. Then I read the Bitcoin white paper and understood digital scarcity and just the digital economy that we all have come to know.
Yeah.
And so I was doing a lot of consulting when I was a professor for crypto companies that were engaging with regulators and elected officials. And I realized there was a gap in the market for an entity that could be a liaison between crypto companies and founders and policymakers. So that's when I started the Texas
Mhm.
Blockchain Council in 2019.
Okay, so you went from Army to political science. Talk to us about that. How did that part happen?
Quick transit. Yeah. That's interesting
Yeah,
transition.
yeah. I mean, it happened to be part of my studies. I was also a civil affairs officer, which is kind of that Department of State liaison. So there is a lot of policy science related to that portion of my work, or of the work of the branch of the civil affairs group in the military. And they do a lot of coordination with the Department of State. So always had an understanding of that component of foreign policy. And so my master's degree was in international relations, and then the PhD capped it off. So
Yeah. So that's cool. So you got into, obviously you did that and you got into the Bitcoin. You read the white paper and you decided to start that Texas Blockchain Council. And what was the thought process around that? What was kind of what you were thinking at that point in time?
at first, in 2018 and 2019, it was just a side hustle as a professor. And then the demand for what we did was growing. And so I decided to leave that and start this full time. And, um, you know, the things that we do, primarily we do two things. We do regulatory and policy work, and we also do business development. So we're a typical trade association where we try to connect our members with opportunities, brand enhancement, increasing their brand awareness, providing them with connections, B2B introductions that allow them to grow their business. And then we also do the regulatory and policy work. We have lobbyists that we hire. We work on different pieces of legislation, as well as kind of the regulatory work that happens in between the sessions.
Yeah,
That's really cool.
definitely. We'll get into that a lot more. But talk to us just to start. Like, what is a trade association?
Trade associations are industry groups that represent the interests of any particular industry. Um, the largest is the U.S. Chamber of Commerce, right? So they range from as broad as the U.S. Chamber to niche industry associations like us, right, where we're representing a very specific industry in one state. We do work in other states and at the federal level, but the vast majority of our work is in Texas.
I love that, by the way. I'm a big fan of Texas. So I guess curious why you chose Texas as the starting point.
Well, I was here for one, lifelong Texan, born here, was working here. I
Yeah.
think the other big reason is Texas is a massive economy, and there's a lot of Bitcoin activity, a lot of digital assets activity in the state of Texas. Um, when we in 2019, Texas is actually kind of a laggard with regard to policy. The Brookings Institute ranked it on the lower quartile for states that related to their crypto policy and what they've done to create a good regulatory environment for digital assets. And so that got me thinking, hey, there is a need here. The industry is here. Um, Texas is a big enough economy. It's not like some of the smaller, like Rhode Island did a lot of great work in the policy. Excuse me, not Rhode Island, Wyoming did a lot of great work in digital asset policy in the early years, but it just wasn't a big enough economy. There weren't enough businesses there to really move the needle. And I'm sure they attracted some businesses there, which was a great thing. But, it really helps to have the world's 8th largest economy, like the state of Texas. Of course, if Texas were a country, it would be a larger economy than, Brazil or Canada or many of these other countries. So,
Yeah,
For sure.
absolutely.
Talk to us about, I guess, first thing, like the industry in Texas. So I presume there's a lot of miners, but talk to us, give us kind of the full picture.
yeah, so Texas is often viewed as like the Texas Triangle. So you've got Houston, Austin, and Dallas. San Antonio is probably part of the Austin part of that Texas Triangle, the Austin corner. Um, Austin is known for technology. It's the Silicon Hills, is what they call it. Houston is the energy capital of the world, and Dallas is very quickly becoming one of the finance capitals of the world. There's more finance professionals in Dallas than any other city in the United States, bar New York City.
Wow.
So more than Chicago, more than Boston, more than LA. What we are seeing now, in fact, the Texas Stock Exchange is spinning up. We've got the New York Stock Exchange has just moved their Chicago sub exchange to Dallas. The NASDAQ has opened up an office in Dallas. So Dallas is sort of the financial center of the state and quickly becoming one of the financial centers, the second financial center of the nation. And so with those three areas of emphasis, you've also got rural Texas with Bitcoin mining, like you guys alluded to. So Bitcoin mining typically happens in rural areas where there's an excess of energy and not enough demand of energy. So West Texas is a perfect case. Lots of energy out there, wind, solar, natural gas, and just not a lot of demand because it's so big and sparsely populated. So we got a little bit of everything here in the great state of Texas.
Yeah,
Yep.
that's awesome. That's very cool. Well, maybe you kind of just talking at a high level now and get into maybe some aspects of what you're seeing in the space, what you're working on with your members as far as talking maybe more from macro
Yeah.
policy
Kind
perspective.
of high level. Yeah.
Yeah, and then we'll get into more specifics.
Sure. So at the macro level, we need a few things to happen at the federal level, and we also need things to happen at the state level. So we are working closely with our partners on encouraging the passage of the Stable Act and the Genius Act, which is stablecoin legislation at the federal level. The Stable Act just passed the House Financial Services Committee. It is well on its way. I think there is appetite in the Senate, so we will see. Those two bills, while they are slightly different, the Genius Act is obviously over there on the Senate side. When they come together in conference committee and how they kind of combine those efforts, I think there is sufficient appetite in both chambers to get a stablecoin bill passed. And then after that, market structure is next. So a lot of work to be done there, but I think we're optimistic that both of those things get done in 2025. And then at the state level, the states obviously regulate money services businesses with money transmission licensing. They regulate, we have a uniform commercial code bill. So all 50 states have their own business law. They try to stay uniform. There is a Chapter 12 adjustment that we're passing related to digital assets. So that bill is going through. We have a DAO bill because corporate structure is done at the state level. So entity formation. The DAO bill is a decentralized and incorporated nonprofit association. So it's like a new wrapper for DAOs, essentially. So for your listeners, DAOs are decentralized autonomous organizations. Your listeners probably already know that already, but yeah. So we've got a ton of things going on. Of course, Bitcoin mining and data centers, AI data centers, that's all regulated at the state level with the Public Utilities Commission, with the grid operator and the various utilities and the legislature. So never a dull moment.
Yeah. So you're bored a lot of times is what you're saying. It's not like that.
Right.
No, there's a lot, obviously. Yeah. That's pretty fascinating. There's a lot of, in real time, of course, too. Obviously, as you talked about the progression of activity over the years and quickly seeing Texas as kind of being a prominent player in the space. And you guys are innovating a lot of things. What are some of your members having challenges with, I guess, current state right now, or what are you focused on helping them kind of uncover different opportunities or reframing challenges, I guess, in the space?
Yeah, it's an interesting time in digital assets for a lot of reasons, but especially related to banking. We've seen the OCC and the FDIC both roll back some previous guidance that was quite um, overbearing. We also saw the repeal of SAB 121, and the Fed will likely roll back their guidance soon too. So banks are really working to understand the digital asset space. It was for several years it was don't touch it, don't touch it, don't touch it, and now it's like, yeah, that's fine. So they're having to go from 0 to 100 on a dime, and as you guys know, banks aren't really built to turn that fast. So I think it's an interesting. We're setting up working groups and doing educational lunch and learns for bank executives. That's been a pretty unique opportunity, and I think there's a great, you know, now's the time to certainly do that. Of course, a year ago would have been the time to prepare, but banks had no way of knowing that their regulators would change tune so fast.
Yeah, and that's
Hmm.
unprecedented, right? That really has never happened this quickly.
Completely unexpected. I mean, I thought it would take the entirety of 2025. And here we
Yeah,
are with like major guidance from two bank regulators, you know, in the first quarter of the year. So,
Yeah, lots to dive in on that front. Let's uh, let's maybe talk about stablecoins. So talk to us about some of this guidance that we're seeing, and what's the thought right now with stablecoins? What's happening there?
yeah, I think we want to make sure that stablecoins are regulated, but they flourish, right? So that's always the challenge of any regulator, any lawmaker, policymaker. The primary goal for Congress is to have the dollar remain the world reserve currency. So they want stablecoins to be denominated in dollars. They want stablecoins to be the forced buyers of treasuries that they are. In 2024, stablecoins were the seventh largest buyer of U.S. treasuries if they were a country, and in the fifth largest if you take out Luxembourg and the Caymans, which host a lot of hedge funds, right, that are
hmm,
heavy into treasuries, or the hedge funds aren't necessarily heavy in the treasuries, but they have that as an allocation. Um, so I think there's a lot of opportunity for the United States from that perspective to grow the demand for treasuries, because at $200 billion we're the seventh largest buyer. What happens when stablecoins market cap is a trillion, right?
yeah,
Um, and that's not with the growth trajectory that we're seeing. That's not far off, and then that's probably 3 or 4 years away.
yeah,
So that's one piece of it. The other piece is making sure that the Fed and the state regulators understand this technology. These deposits are not very sticky. They're 24/7 on demand deposits. So, banks have to treat them a little bit differently. We need to make sure that we're not permitting algorithmic stable coins or other kinds of risky stable coins. So yeah, a lot to do but the legislation that's currently on order is both the Stable Bill and the Genius Act are both well equipped to do those things.
Let's maybe kind of dig into some of the details there. So what's really what's the groundwork they're laying out for stablecoins?
Yeah, there is kind of this question of, is there going to be a dual regulatory framework for stablecoins for state banking regulators and the Fed, or is it just going to be at the Fed? And so, eh, we're a little bit indifferent to that. Obviously, you would think that maybe we are more state centric, but we also understand the value and the time saving for different stablecoin issuers if it's primarily a federally regulated uh, market operation. So that is kind of an open question as to what the dollar limit is right now. I think it's 10 billion. If stablecoin is under 10 billion, it's duly regulated and primarily regulated at the state, and then the reverse is if it's over 10 billion.
Hmm.
I never like these like hard cap 10 billion. I mean, these things should be on a spectrum, right? Because you always get perverse incentives, like with the Dodd-Frank Act, and you have certain thresholds, and banks are like trying to stay under that $100 billion or $50 billion in assets threshold so that they don't get extra regulations. So hopefully we can kind of smooth that out a little bit, but and we've got to get Tether, regulated, right? So the two largest stablecoins globally are Tether and USDC. Both, are doing great things. USDC is obviously US based stablecoin, which we love. But Tether buys a lot of treasuries, and they're denominated in dollars. I mean, the vast
Yeah.
majority. I mean, essentially all Tether is denominated in dollars. So, their CEO recently came out saying that they're pursuing a Big Four audit. So we want to make sure that um, we're not closing the door for Tether to become operational in the U.S. I think that would be unwise. But again, they've got to do some things on their end to make sure that they're regulated at the same level as as Circle USDC is regulated. So no shortage of controversy there between the two largest stablecoin issuers.
Right.
Yeah.
Yeah, absolutely. Um,
Okay.
yeah, that's definitely interesting. Yeah, but there's probably more to come on that in real time here. Um,
Is there anything in the stable coins that people are not really thinking about yet that's maybe on your radar?
I think maybe like a more explicit prohibition on algorithmic stablecoins would be helpful. Um, it's perhaps up to interpretation right now whether or not it's explicit or it's not permitted.
yeah,
So I think these bills are pretty well baked already, so I don't think there's going to be a lot of changes. But if any of the language could be strengthened around that, that's something that we're kind of encouraging.
yeah,
Hmm.
makes sense. Kind of going back into the switching gears a bit on just talking about the Texas Strategic Bitcoin Reserve uh, narrative and what you guys have done in the past and where you see that going forward here. It's obviously pretty groundbreaking from the market perspective.
Yeah, we're excited. I think there is a really high chance that the bill passes. It's through the Senate now.
Yeah,
It's going to be heard in the House in the coming weeks. Um, and we have a lot of allies in the House, and I think people understand that this is an exciting technological frontier. Data is the new oil, and so whether you're talking about securing transactional data on the Bitcoin blockchain or AI data for training models and running inference, um, Texas is going to lead there, especially because we have the energy generation, the space. We will be the data center capital of the world. Um, there's no doubt in my mind in the coming years, we will overtake any other jurisdiction, including Washington, D.C. and the Northern Virginia area, as the data center capital of the world, both with Bitcoin mining and AI and cloud compute. So, um, getting a Bitcoin strategic reserve bill passed is sort of a signaling effort to say, hey, just like the oil and gas industry really propelled Texas in the 20th century, in the 21st century, the new economy, the digital economy, data will propel Texas to be a global powerhouse.
that's very exciting.
Do you foresee other states following in your path?
Yeah, there are several other states that are working on legislation right now. Some of them may even beat us to the punch. I don't think so, especially because we actually have a appropriation to buy Bitcoin and put Bitcoin on the balance sheet of the state. There are some other states that have kind of bills that would do similar things, but that don't actually appropriate funds or maybe just create opportunities for pension funds to invest, which we think is different. The state actually custodying the Bitcoin or custodying it through a qualified custodian, um, the comptroller's office learning that process and actually reporting Bitcoin on the balance sheet of the state of Texas is a watershed moment. Um, so I think we're perhaps going to be unique in that way.
Yeah. Well, to your point about just the ecosystem of Texas with energy, data centers, now policy, they're all the things that are converging, which I think is a really interesting paradigm, right?
Yeah, we feel good about being in Texas right now. I mean, There's a lot of economic activity happening here, and it's only accelerating.
Yeah, very exciting.
Another topic of interest to talk about here is debanking. Maybe start by just explaining what is debanking to those that are listening.
Sure. Yeah. So debanking is the process by which federal regulators put pressure on banks to not bank an industry because of the political winds. And so that's happened to the oil and gas industry, the firearms industry, and the crypto industry. And it's really not an explicit ban, but it's the fact that if you have crypto clients in the bank, you're going to have 5x the number of examiners that come for your next bank examination. Uh,
Hmm.
so it's also the practice that many regulators had, which was for your traditional banking practices, you don't have to ask permission. You just do whatever is in the your best practice for safety and soundness at your bank. But for crypto, it's a you got to ask permission. And no bank is going to say, hey, we're going to go open ourselves up to a regulator for 5%, for 1% of our portfolio, so that we can add a couple deposit accounts. That just equate to such a small percentage of our overall bank. The risk reward just isn't there. So you have
Right.
a de facto debanking that is less sinister and more sinister in a sense, depending on how you look at it, right? It wasn't like a de jure debanking where, there were regulators saying, absolutely, you can never bank crypto, although they said it in so many different ways, right? It was more disguised.
Yeah, yeah,
Hopefully, some of this gets resolved. Are you starting to see banks kind of open up more to the crypto space?
Slowly, but surprisingly, we're still having trouble with that. We still have members come to us and say, hey, we can't get a bank account. And that's going to come to an end soon, I would imagine, based upon the trajectory and how things are going. But that's surprising, right? Like and I'm not talking about members that are like deep at the cutting edge of DeFi. I'm talking about just traditional financial services companies that happen to deal with crypto. Um, I can understand a bank says, "Hey, we don't understand your business, and we're not going to bank you." If it's some sort of like extremely new and novel piece here, but we're talking about traditional businesses that have been operating legally in the U.S. for a decade and still having trouble with banking, and that's just it's not healthy, but also we don't think that's going to last for very much longer.
yeah. Well,
Yeah.
even just on the other side, I've seen we see fund managers who, to your point, now are taking multiple banks into account for in case one of them decides to pull the rug underneath from them, right? So they're trying to mitigate that risk with business disruption and having multiple different opportunities or options in case that does happen. So yeah, definitely the
Yeah.
concern is alive and well still.
Yeah.
And obviously back in it was like March of 2023, was a Silvergate. A couple other banks went under. I know they did a lot of like the crypto business, especially Skylar and I coming from the fund side of the business. Like we had a lot of funds that were working
Yeah,
with those particular banks. Obviously
SPB.
went under, and
Yeah.
yeah, SVB definitely a challenge at that time. But you see that part kind of loosening up maybe on the enforcement side.
Yeah, and I think what we saw back then with Signature and SVB was and Silvergate was probably the pinnacle of perhaps verging on illegal activity by some of the bank regulators to put some of these banks into receivership that you know they would not have done had they not been you know digital assets. And with Silvergate and Signature in particular, right? SVB is a little bit different of an animal. That was just a
Right.
bunch of they just had too much treasury rate exposure, and the rates went against them, and they had too many long term treasury bonds at low interest rate. So, and also a very small percentage of their clients were crypto related. But with Signature and Silvergate, it seemed quite targeted. And Nick Carter has done quite a lot of reporting on this, and has actually looked through a lot of these redacted letters and documents that have come out, and it's pretty clear that, were those banks not involved with crypto, but they were in a similar situation, they would have not, been taken into receivership.
Yeah.
Yeah. One more kind of small topic on this front. Have you seen a lot of your members, individuals, get debanked?
Absolutely. Yeah. A lot of people have stories with this. And, I should be clear, there is a very small percentage of the time where that is justified, right? If an
Sure.
individual is engaging in activity that the bank doesn't understand or may have some questions about the legality of that activity, then by all means, the bank has to, in their commercial relationship with that company or individual. But that is, obviously people don't tell us about those cases, but we know those cases are out there, and we have no, there's no reason to defend that. Just like we wouldn't defend that in traditional financial services, right?
Right.
If somebody's going to debank a company that's operating in a gray area in the fund space, you're not going to defend them because they're operating in the
Right.
gray area. So yeah, but the vast majority of just people that are building startups, or just individuals even that work or have um, have exposure to crypto have probably experienced some debanking. I mean, even us as a trade association, a nonprofit trade association, have had our own challenges because we have blockchain in the name of our trade association.
Yeah, right.
Right. Yeah. Can you maybe talk about some past kind of things you've advocated on behalf of your member base, in court case, or just anything you could speak to that you've kind of worked on?
Sure. Yeah, we've sued the federal government on a couple of occasions related to our members. One of them was when Elizabeth Warren encouraged the Department of Energy and the Energy Information Agency to put out a unlawful survey targeting Bitcoin mining companies and requiring them, with criminal threats, with criminal, I guess, consequences if they refused to divulge proprietary information. And so we very quickly won a lawsuit in the Central Texas Federal District Court in a matter of 12 days, which, if you guys know anything about, federal court processes, they are not quick. So it was, we had this preliminary hearing, and then we had the hearing 11 days later, and then the Department of Justice essentially settled and departed with their tail between their legs. And we got everything we asked for. I mean, they had to revoke the survey. It was, they violated several federal statutes in the politicization of those agencies. And again, we're not opposed to sharing that information. We shared all of that information with the state of Texas when the state of Texas asked, with the Public Utility Commission, with ERCOT, and other states. That information is shared by our members. It was the fact that Elizabeth Warren was threatening to make that information public and use that proprietary information to harm these businesses and harm, especially like large energy companies that were doing business with Bitcoin miners. It may be 5% of their portfolio. It's the same bank thing. Well, they'll just cut them off. They're like, if we're going to draw the ire of Senator Warren for 5% of our portfolio, and we're supplying energy to a Bitcoin miner, let's just cut them off. And it's not worth it for us to engage, have that. So that's obviously not, that's Banana Republic type stuff, right? That's not
Yeah.
the kind of political process that, we want to see here in the United States. The other lawsuit that we were part of was the suing the IRS relative to the broker rule. That would have pulled in a bunch of software developers, unhosted wallets, and DeFi into the definition of broker. And so that one is kind of winding down favorably, mostly because the IRS is backing off that guidance. And then we've passed several pieces of legislation in Texas as well over the last 5 years. Some uniform commercial code updates, creating a blockchain working group, creating a proof of reserves bill. So, and then also a flare gas bill that incentivizes the redirection of flare gas to on-site generation for compute, whether AI, Bitcoin mining, or whatever. So, we've had 4 bills that we've researched and helped to write pass over the last 5 years, and we have six or seven other bills in the fray right now in the Texas legislature. And the strategic Bitcoin reserve bill being one of those 7. The Dow bill being another of those 7. So we've got a lot of irons in the fire right now.
Yeah.
Great.
What is your biggest achievement so far that you guys are most proud of?
I think if you ask me that in a month, it'll be getting the strategic Bitcoin reserve bill passed, because even just a year ago, I would have said there's no chance. In fact, we were working on a structure where we would have people donate Bitcoin to a trust, and the benefactor of the trust would have been the state of Texas. And that was the only way we even contemplated being able to get Bitcoin on the balance sheet of the state. And now we have the state saying, we don't need the trust. We're going to create our own vehicle. It's going to be managed by the comptroller. And by the way, we're going to allocate some of our reserve assets that we invest to, to buying Bitcoin, which is a shocking turn of events, in my opinion.
It's huge.
Yeah.
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 It's pretty amazing when you think about it, how fast things spin on a dime.
Yeah, and it's going to be a small amount. I mean, the legislators are very cognizant that they are operating with taxpayer funds. Texas runs a balanced budget. We cannot run deficits constitutionally. We have a surplus. So this will come out of surplus investable funds. And it'll be $20 million or something, which is a lot to any one person, but pretty negligible relative to the state of Texas.
Yeah, absolutely. Could you talk to us about market structure in terms of legislation?
Yeah. I think the best high level way to think about this is everything's on a spectrum when it comes to crypto assets and digital assets. You have Bitcoin that is the most decentralized and the most commodity-esque. And then you've got some random coin on a permissionless or permission chain that, the founder owns 90% of, and he's selling it like, it's like verging on a fraud, but it's definitely a security, right? So, and everything in between, of course, like as you go down Bitcoin, Ethereum, Solana, et cetera, you get a little bit less decentralized and a little less commodity-esque, right? So market structure legislation creates a pathway for, that handoff between the SEC and the CFTC. So large assets like Solana, Ethereum, Bitcoin's already very clearly a commodity. These other assets will likely start out in the Commodity Futures Trading Commission's remit. But then you have a way. Okay, once these assets have met sufficiently decentralized threshold and other thresholds, they're able to move along that pathway from a security to a commodity. So, and there's some things that will never move. For example, tokenized real estate. It's always going to be a security. Now, you might have some like bond or something tokenized, money market funds. There's probably other tokenized assets that are, on that spectrum, but there's others that are always going to be security, and that's okay. I mean, tokenized real estate's probably always going to have a Reg D, or they're going to trade on ATSs or something like that, alternative trading systems.
Yeah, I like that. So you think of it kind of like a spectrum, like Bitcoin's definitely commodity, and it kind of goes down. I like that thought process. Yeah.
What do you see, I guess, relative to Texas here specifically? I mean, from institutional adoption perspective, obviously everybody talks about that at a high level, waiting for it. But what do you see, I guess, from your constituents, the feedback that you're getting in real time?
Yeah, I mean, I've always thought like institutional adoption hasn't happened yet.
Right.
And what we're seeing is like a couple early movers, yeah, and people are calling that institutional adoption, and it is. They're not wrong. But if you talk about the bulk of major enterprises and, money center banks and regional banks and fund managers and registered investment advisors. We just have a long way to go, and that's good news because um, that means we've been able to travel pretty far with just a little bit of wind in our sails.
Yeah.
So I'm pretty optimistic. Of course, all this tariff stuff that's happening at the macro level is disappointing. Um,
Yeah.
I'm as a political science person pretty adamantly opposed to tariffs. With there's all these armchair tariff folks that are out there talking about tariffs. I've actually studied tariffs 10 years ago and studied economics 10 years ago, and there's centuries of economic research that show that tariffs can be used as a tool and occasionally are effective tool, but net they are net negative for any country imposing them, including one that runs a trade deficit like us.
Yeah. Yeah. That's interesting. If I could ask a question on that, just it's again, given the tariffs that have been on us for decades, how do you feel about that kind of other side of the fence narrative?
You mean like on related to crypto?
Well, crypto or in general, I mean, just or even how it affects Texas specifically. Other like countries, are putting tariffs on the U.S. at a pretty high percentage relative to what the turnaround percentage is for. And maybe I'm wrong on that. I'd love to get your perspective.
Yeah. So I'd say, under the GATT rules and kind of the tariff rules that were set up after World War II, we actually we just don't have competitive exports. Most countries don't have. In fact, I'm not aware of any countries that really have prohibitive tariffs on us that are more greater than what we have on them. There's what's called most favored nation status for tariffs, and the majority of our trading partners fall into that category. Now, I think what you're referring to is sort of the currency manipulation that's happening, that the president is trying to use tariffs to get people to say, hey, stop debasing your currency so that you can dump goods and be more competitive in the U.S. market. And he has a point there, certainly.
Yeah.
I think that is definitely happening, and we're being taken advantage of in that way. But where I would differ with the administration is, there are other ways to try to tackle that instead of holding a gun to both countries' heads and saying, it's just not good for business. Uncertainty is bad for business, and I think
Yeah.
the president knows that. And so I don't think I still am one of those crazy people that thinks this is a negotiating tactic.
Yeah, I was going to say, how do you think this kind of plays out?
I think a bunch of countries will come to the table and get their tariffs halved, and you
Yeah.
know there is a world where increasing tariffs by 500 basis points doesn't move the needle enough for them to move their supply chain, but increases revenue, tariff revenue for the United States, and that revenue could be earmarked for reskilling, or even subsidizing American manufacturing, right? So that's how China does it. Um,
Right.
so I think there are some more nuanced ways where we can see manufacturing come back. I just don't see like some of these major companies relocating huge factories from Vietnam to the United States. Um, we either need to subsidize our own manufacturing here on national security grounds, like we do with the space industry, or make the tariffs modest enough where people will pay them and just eat that tax, and then
Yeah.
you could earmark those funds for reskilling and upskilling.
Yeah. There's always a devil in the details, right? Just and I even just saw today just how China is taking goods and shipping them to Taiwan to mitigate some tariff activity on their side. So there's always these moves and counter moves behind the scenes, right? That we're seeing in real time.
Yeah.
Yeah.
Yeah, and,
Very
and
interesting.
at the end, it's just inefficient, right? Um, Even if they're doing that to avoid tariffs, we're going to still pay more for those goods because they're having to pay more to ship them to Taiwan and having a warehouse there, and faking
Yeah.
all the paperwork that those things were built in Taiwan, and that's expensive.
Cost and time.
Yeah.
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 Let's say, Lee, if you could change one thing about US blockchain regulation today, what would it be and why?
I'd say what I would change is I would accelerate market structure and stablecoin legislation, and I would have had that pass 24 months ago if I could wave a magic wand. Because imagine where we would be today as a global powerhouse in digital assets if we'd had those two pieces of legislation passed.
Yeah.
Yeah.
Yeah, absolutely.
When it comes to the folks that you guys are working with, who should become a member? Who do you guys see as like the primary like member types, and do they need to be based in Texas?
Yeah, good question. No, not based in Texas. We have members from all over the country and all over the world. Typically, they have business operations in Texas. They have some sort of regulatory need in Texas. But we have a lot of members that join for the business development side. So banks, law firms, accounting firms, even private equity companies, they join not because they want us to lobby on their behalf, but because they want to, know and be connected to the industry in a more granular way. And we try to provide that as best we can. And then you also have the companies that do have regulatory risk, Bitcoin miners, crypto exchanges, all, crypto native companies. Those are the ones that join for the lobbying piece and the advocacy side of the business.
Well, cool. Lee, as we wind down here, really appreciate you. Thank you for taking the time. Great to get your insights. Always interesting to talk about the regulatory side of things. Where could people go to connect with you and learn more about Texas Blockchain Council?
Yeah, I'm at Lee_Bratcher on Twitter, and Texas Blockchain Council is just our name, texasblockchaincouncil.org. And we host the North American Blockchain Summit every year, which is kind of an institutionally focused event, similar to the one that we met at a year ago or so.
Amazing. Well, that's great. Well, Lee, this has been a great conversation, and we'll make sure to include all that in the show notes, including the upcoming summit or conferences that you have as well.
Absolutely.
Thanks, guys. Thanks for having me on.
Awesome. Thanks so much, Lee.